Hello, everyone. Welcome back to our channel. Today, we are going to talk about a topic that many of you have asked about: how seniors can invest in stocks safely and wisely. Now, I know what some of you might be thinking. Stocks are too risky for my age, or I don't have time to recover from losses. Those are very reasonable concerns. But here's the truth: investing in stocks doesn't have to mean gambling your retirement savings. With the right strategy, the right mindset, and the right balance, stocks can help you preserve your wealth, fight inflation, and even provide extra income. So, let's take this step by step. This is going to be a long video, because I want to explain everything in detail without rushing and make sure you feel confident by the end. Grab a cup of tea or coffee, get comfortable, and let's begin. First, let's answer the big question. Why should a senior, someone in their 60s, 70s, or even 80s, even bother with stocks? Isn't it safer to just keep money in the bank? Well, keeping money in the bank feels safe, but it has one hidden enemy: inflation. Over the years, the cost of living goes up. Food, healthcare, housing, utilities, they all become more expensive. If your money is just sitting in the bank, earning almost no interest, its value is slowly shrinking. Stocks, on the other hand, represent ownership in real businesses. Good businesses grow their profits over time, and when they do, their stock prices and dividends often grow too. That growth helps protect you from inflation. Even if you don't want high-risk stocks, having a portion of your portfolio in solid, reliable companies can help your money last longer. Before investing, it's important to ask yourself, what do I want from my investments? Do you want extra income each month? Do you want your money to grow slowly and steadily? Or do you simply want to preserve your savings against inflation? For seniors, the focus is usually on income and safety, not chasing huge growth. You're not trying to double your money in a year. You're trying to make sure your money supports you for the rest of your life. Think of investing not as gambling, but as a tool. If you choose the right tool for the right job, it works for you. One of the biggest mistakes seniors make is going all in on one thing. Some put all their money in cash. Others chase the latest hot stock because they heard about it on TV. Both extremes can be dangerous. The golden rule is balance. A simple example is the bucket strategy. One bucket is for cash money you need in the next 1 to 3 years. Safe, easily accessible, no risk. Another bucket is for income things like dividend-paying stocks, bonds, or funds that provide steady payouts. The last bucket is for growth, stocks that can grow over time to protect you against inflation. This way, you don't panic if the stock market goes down, because you have cash and income to cover your needs. Now let's talk about a type of stock that many seniors love: dividend-paying stocks. A dividend is simply a portion of a company's profit that is paid out to shareholders, usually every 3 months. Think of it like getting rent from a property, except here, the property is a share of stock. For example, large stable companies like utility companies, phone companies, or consumer goods companies often pay reliable dividends. These businesses don't grow as fast as flashy tech companies, but they are steady, and they reward shareholders regularly. Dividends can be used as income to pay your bills, or reinvested to grow your investment even more. For seniors, dividend stocks can feel a lot more comfortable than waiting for a stock to go up in price. Some people feel nervous about picking individual stocks. What if you pick the wrong one? That's where funds and ETFs come in. A mutual fund is like a basket of many stocks managed by professionals. An ETF exchange-traded fund is similar, but usually has lower costs and trades like a stock. Instead of betting on one company, you spread your money across hundreds of companies. This way, if one company struggles, the others balance it out. For example, a dividend ETF might include dozens of companies that pay dividends. You get the benefit of diversification and still collect income. This is one of the safest ways for seniors to enjoy the benefits of stocks, without the stress of picking winners and losers. This is a very common question. The old rule of thumb was to subtract your age from 100. So if you're 70 years old, you'd put about 30% of your money in stocks. But today, people are living longer, often into their 80s and 90s. That means your money has to last longer too. Many experts now suggest subtracting your age from 110 or even 120. So if you're 70, you might keep 40–50% in stocks, depending on your comfort level. Of course, this is not a one-size-fits-all rule. If you already have a pension or rental income, you might not need as much in stocks. If you rely heavily on your savings, you may want to be more conservative. The key is to adjust based on your situation. Now let's talk about some mistakes that seniors should avoid. Chasing hot stocks. If you see news about a stock skyrocketing, it's often too late. By the time everyday investors hear about it, the professionals have already made their money. Putting too much in one company. Even the strongest-looking company can stumble. Always diversify. Ignoring fees. Some mutual funds and advisors charge high fees that eat away at your returns. Always check costs. Panic selling. Markets go up and down. If you sell every time stocks dip, you'll lock in losses instead of recovering. Not having enough cash. Always keep an emergency fund, so you're not forced to sell investments at the wrong time. If you're new to stocks, here's a simple plan to start. Review your finances. How much do you need for living expenses? How much is available for investing? Open a brokerage account. This can be done at a bank or online. Choose one that has good customer service for seniors. Start with ETFs. A broad market ETF or a dividend ETF is a safe entry point. Add dividend stocks. Once you feel comfortable, pick a few well-known companies that have paid dividends for decades. Check once a month, not every day. Don't let daily ups and downs stress you out. Work with a trusted advisor if needed. But remember, ask about fees and make sure they understand your goals. Finally, let's talk about mindset. Investing is not just about money, it's about peace of mind. At this stage in life, you don't want sleepless nights worrying about stock crashes. You want confidence that your money is working for you while you enjoy life. Whether that's traveling, spending time with grandchildren, or simply living comfortably. The key is to see stocks not as a gamble, but as a partnership with businesses. You're letting your money participate in the economy, and in return, you earn dividends and growth. Stay patient, stay balanced, and remember investing is a marathon, not a sprint. So, to wrap it up, seniors should still consider stocks, but in a balanced way. Focus on income and safety through dividend stocks and ETFs. Avoid common mistakes like chasing trends or panicking. Keep a portion in cash so you always feel secure. Investing in your senior years isn't about making millions. It's about making your savings last, giving you income, and giving you peace of mind. Thank you so much for watching today's video. If this helped you, please give it a thumbs up and share it with friends who might be curious about investing. And of course, subscribe for more simple guides on money, retirement, and living well. Take care, stay safe, and I'll see you in the next video.